Commercial paper. This is another means you can invest your money when you have a lot of money that is idle, life fallow, you don't have anything to do with it. Commercial paper CP in Nigeria are short-term unsecured debt note issued by large credit-worthy companies to raise funds for working capital. Yes, this is issued by companies that need funds for working capital, offering fixed return, often higher than savings account. Shey you hear? Is the interest return is always higher than savings. That's what they are telling you here. With maturity from days up to 217 days, traded at a discount on platforms like FMDQ and the NASD. Those are platforms they use in trading this commercial paper, providing a liquid, lower risk investment for individual and institution. Yes, the risk is very low, it's very minimum. Yes, because it's big ship companies that are always involved with this. Key features: issuer, large reputable corporations, like I have said, big ships companies, big corporate companies like banks or financial institutions with good credit rating. Those are the companies that can involve in this kind of transactions. Purpose: funding short-term needs like working capital, inventory, or operations. Yes. Maturity: short-term, typically 30 to 217 days or up to 364 days in some cases. Yeah. Structure: sold at a discount to face value. Interest is the difference. Yes, your face value and the generality that will accrue at the end of it all. When you divide the generality, you minus the face value from the generality after the tenure, what is remaining is your pay is paid at maturity or upfront. Yes, after calculating, using system to calculate what is supposed to be accrued to you after agreeing on a certain percentage based on the rate in the market, you can be paid instantly while the tenure runs. They credit you with your interest immediately to your account and you can have access to and use it even while the tenure runs. You don't wait till the tenure of the transaction finishes before crediting you your interest. No, you can be paid at maturity or upfront. You can decide to say it's after the tenure of the transaction that I should be paid, or I need the interest to use now. Pay me now. They can pay you upfront. You can decide to wait till after the maturity of the transaction. That's what they are talking about. Security: unsecured, no collateral, relying on the issuer financial strength. Like I said, e have a little risk, unlike the treasury bill which is solely on the federal government. This one, because is the blue chip company, big companies that are involved, so they has a little risk, very minimum anyway, because it does not have collateral. E rely on the strength of the company. If the company is very viable and strong, you don't have to be scared of anything. But if the company is weak, you could be scared, or that's why you should find out the type of company before going into transaction like that with such company. Regulation: regulated by bodies like CBN, FMDQ, and SEC, with mandatory listing on exchange for banks. How they work for investors: issuance: companies issue CPs, commercial paper, through platforms like FMDQ or NASD. Investment: individuals and institutions buy these notes, essentially lending money to the company. Yes, you are giving money to the company for interest. Return: and fees interest, yes, for interest, often higher than fixed deposit, and the principal is returned at maturity. The interest on CP is higher than the interest for fixed deposit account. Yeah, that is why you have to go for this if you have the capacity. Yes. Platform accessible via investment platforms, e.g., Secmore, Arm, Foundation, or money market fund. Liquidity can be traded on exchanges offering liquidity. Note, some platform now allows investment as low as 100,000 naira. So what they are saying, as low as 100,000 naira, there are some platforms or company who can have can deal. Yes. Benefit for investor, higher returns, higher returns often yield more than traditional savings. Of course, that's what we've been saying. Short term, ideal for short term financial goals. Short term, it could be shorter than that of treasury bill. Yes, excuse me. Liquidity, ideal for short term financial goal. Liquidity can be traded on the secondary market. Yes, you can buy from the secondary market also, like we have discussed from the other area. Tax, tax. This is equally exempted from interest. Interest earned is often tax free. Yes. Risk, credit risk depends on the issuer ability to repay. Like I have said, depend on the viability of the company. If the company is very strong, you don't have anything to be scared of. But if it's not strong, you should. You should. Yes. Liquidity risk. Liquidity risk availability depends on the company issue that issues them. Yeah, this is another way you can invest your money. Please like, share, comment. Most importantly, follow Tola Amplifier for more teachings, more educative teachings like this. Thank you.